Hello, everyone. Welcome to episode 30 of Great Quarter Guys. I am your host, Andrew Cox. I'm here with me, Mr. Kevin Hill. How are we, Kevin?
We're doing good today. We're doing good.
Yeah, did you have a good Memorial Day weekend?
I had a great Memorial Day weekend, played a little golf, relaxed, and now we're on Great Quarter Guys going to talk about something from my childhood that I remember quite a bit.
Yeah,
malls.
what was once a monument of American consumerism, and now seemingly going to the wayside.
It was a gathering place for the community. Go watch a movie, go eat, go shop, and now they're being abandoned in a rapid pace.
Yeah, no doubt. And we've got an incredible guest with us today. It's actually one of the OG hosts of Great Quarter Guys and the creator of its namesake, Great Quarter Guys. This is, of course, Mr. Seth Holm. He's on our team here at the Freight Intel Group, and as a consumer guru, he spent about 10 years at a hedge fund in Atlanta covering consumer stocks and TMT. So we'll just go ahead and bring him right in. We're going to talk about the future of malls. There is Mr. Seth. How are we today, man?
Good. Can you guys hear me?
Yeah, we can hear you and see you great. How was your Memorial Day?
It was good. I went down to Lake Burton and I played golf twice, like Kevin. So, my game's getting better. And now I'm taking care of two kids by myself, getting back into the swing of things.
Yeah, busy day in the Holm household. So let's hop right into the discussion, man. We want to talk a little bit about malls today, talk about brick and mortar and retail, how COVID-19 is accelerating the move away from brick and mortar or the move to online. Just a big conversation there. That we can start off the top is that, of course, in the news, there's been some major retail bankruptcies. We've seen about a dozen or so this year, and some of them have been some really big household names: Pier 1, True Religion, J. Crew, and the most recent Neiman Marcus and JCPenney. Seth, you want to just get off the top about your thoughts on some of these major brands going by the wayside? They obviously were struggling pre-COVID, and this COVID-19 may be the final straw that breaks the camel's back.
Yeah, so, looking at that list, I think we can dice it down a little bit. So some of those are household names, but they don't do a lot of sales anymore, most of them at least. JCPenney probably peaked in 1985. Pier 1 is, a very small company that sold knickknacks. Neiman Marcus, that was an LBO, so that was a function of too much debt. So you got a little bit of different stuff going on there. The mall is certainly dying. We can get into that in great detail. And COVID has certainly accelerated. Here's my early reads on e-commerce. We've been seeing it in the spending. It's been running up about 80%. E-commerce as we ended 2019 was only, surprisingly, only 12% of U.S. total retail sales. And now it's 27%, according to that chart we saw. Amazon put up about 30-something% e-commerce growth in their Q1. They were about half of e-commerce. Then last week, Target and Walmart reported, they're coming off of a much smaller base, but Target grew 141% online, and Walmart grew 74%. And then, the other two huge retailers, Home Depot and Lowe's, have seen booming e-commerce sales as well. So I think there's been an acceleration. Within retail, there's been two big trends. There's been an acceleration in online and an acceleration in market share shifts to the big guys. And a lot of that is unfair because the big guys basically got all deemed essential while the small guys are forced to shut down. So that's what I've been seeing so far.
So you mentioned that chart that we've shown a couple times on the show, and that was the acceleration, the rapid acceleration of e-commerce that was kind of forced by this COVID-19 lockdown. Do you think that's something going to stick? Do you think 2 years from now we'll still have 25% market share on the e-commerce side of total retail spending, or do you think some of that pulls back when the stores are open back up?
Yeah, I think that it's going to go down probably to the high teens, maybe not all the way back to where it was but I would expect, e-commerce to continue to grow. If overall U.S. Consumer spending has bottomed and continues to grow at 3 or 4%, I would expect that to stabilize maybe in the mid to high teens area. I do not expect it to stay at 27%, just because I think that people are itching to get out and spend. And, a lot of the stuff I've been buying, at least, I've been shopping on Amazon simply because I have to. It's the only place I can go. And when Amazon is so busy and they've even hired more people, I've had to go to Target.com as my second option, but I think it's a little. I mean that structural trend to e-commerce is definitely in place and stronger than ever, but I don't think that we'll maintain e-commerce at 27% over the next few quarters. Call it.
It's interesting, Leland. We go over this Bank of America credit card and debit card spending, real time spending, every single week. Seth sends that over to us, and we kind of geek out on it. All three of us, certainly, about this data. And over the last week, department stores are down 67% year over year for last week, which is amazing. I mean, it kind of takes you to the 27% e-commerce type of spend, but just to be that down that much. But you're bullish on department stores and really non-essential retail on the stocks, right?
Okay, so let's separate stocks from the real economy.
Of course.
So this will be interesting. So for people who don't trade stocks, what you need to figure out is where the future is going. Everyone knows Amazon is completely dominant. It's one of my largest stock holdings, for full disclosure. But things are going to open back up, and all the people that have been closed and are delevering on all their fixed expenses and in danger of going out of business, there's going to be a rotation in terms of money managers are going to move money out of, I think, tech stocks and into stuff like brick and mortar stocks. So to be clear, I am bullish on some brick and mortar retailers that are not department stores. So first things first, on department stores, department stores used to be a big thing. They're really not that consequential at all. So they used to be something like 100 billion in sales 15 or 20 years ago. And I used to know all these numbers cold, so we can look them up, but I'll be close. They went from like 100 billion and like 30% of overall apparel spending, and they've gone in a straight line down to like 10 or 20 billion cumulative. So they've lost 80% of the sales that they've had, and they've been closing all over the place. So I think if you're bullish on department stores, it's for a few week trade on short covering. So I am not bullish at all on those. However, on some of the brick and mortar guys who were basically penalized because they were forced to close down, and then those are some beat up stocks. I do think that will be a better place to put your money, even than Amazon, over the next 6 to 12 months, and that's just simply a function of early on in an economic recovery, the market may have gotten ahead of itself, but you want to buy the beat up junky stuff early on in the recovery.
So, Seth, you mentioned earlier we would get into the discussion about why malls have dwindled down. So let's talk about why malls are now the junky cleanup spots that they once were, really monuments to American consumerism. They were places that people made movies about, people that they took the whole family there for an entire day to shop for everyone. Why is that not the case now? Is it simply because we have so many other things to do? We have Netflix and Amazon and everything to take up our time. I mean, what do malls need to do to make themselves cool again?
Yeah, so I know we're talking malls, so Kevin wants to talk Stranger Things.
Yes.
But also, I remember when I was younger, this will date me, but when you had your first girlfriend, you used to go to the mall and hang out and go walk around. Mm-hmm. And so I don't think that malls can go through some big, resurrection in any sort. I think what it is it's just going to be to shift the tenant mix as much as possible to stuff that people want to actually go to the store for, right? So, I read an interesting article from Barron's. You can tell a good mall from a bad mall by how crowded its food court is. I don't know if there's any truth to that, but I don't think there's a lot of these retailers and malls are tired. I'm not a big believer in turning these things into like, hospitals or maybe distribution centers for Amazon that might actually hold some promise, given that these things are all centrally located in the suburbs, right next to the highways and all that kind of stuff. I wish I had like a silver bullet prescription, but I think we'll just continue to see more of the same. And there has been a bifurcation in mall performance for a decade now, where those A and B malls have been doing fine, at least prior to COVID. Foot traffic and I always reference Lenox and Phipps because I'm from Atlanta. Those malls are packed, always packed. So if you've got good demographics and good shops, I think the malls will be okay. They're not going to be booming. I think you may see an initial boom because people are just getting, especially if there's a vaccine, because people are itching to get out of the house and walk around. But for those C and D malls, there's just not a lot of hope there. I mean, it's not the cool place to go anymore. I think a lot of that is digital connection. So, kids are on social media. That's how they communicate these days. They don't go meet up in a mall to go walk around in circles and loiter around Foot Locker. So I don't know. I don't know how to fix that.
But as you mentioned earlier, I just wanted to get your touch on that, so thank you there. But as you mentioned earlier, you said that malls have become, inconsequential. They don't make up a massive amount of the brick and mortar sales anymore. So where has the movement shifted to? Where are people now spending their money in brick and mortar stores? And do you think that will change in the next couple years?
Yeah, so department stores are completely inconsequential. Malls are not totally inconsequential, but they are more inconsequential than they have ever been. They are consequential to the mall REITs, the Simon Properties of the world. Those guys are going to be hurt. But where the spending is going there's two answers. Winning retailers in this day and age, they really you have to be able to differentiate yourself against Amazon because Amazon's eating the world, and the way you do that generally is to have something unique or something that's a value, like a dollar store or something like that, or something that's convenient, or that you have to go buy in person. Those are really the only four things. The other winning formula for retail has been omni-channel. Omni-channel is basically just meeting the customer wherever it is they want to buy. So COVID has actually highlighted a lot of this. Walmart has been very successful in omni-channel. So whether it be online grocery sales, BOPUS, which is buy online, pick up on store, curbside pickup, all that kind of stuff, brick and mortar, and straight online sales. So I do think that sales will continue to shift online and also to that omni-channel mix where you interact with the customer in multiple formats and multiple physical places even.
I do think the someone will figure out the mall question. We don't have the answers, and probably only a handful of people probably has a vision to figure that out. But there's a lot of space. There's a lot of things that you can do. Blue ocean strategy, creating something that is a mall but not a mall, and I think some developers are trying to do that. We'll see if that works or if it's something that is just completely out of left field.
Yes,
but I think someone will repurpose that.
Have you heard about the new mall that I'd never even heard of this company? You probably have, the 555 Group. They're out of Canada. They're basically making leisure recreational centers into malls. They're building one in New Jersey that's supposed to be a 15-year project, $5 billion. It'll have an indoor ski slope. It'll have all of these different attractions to try to get families in there. It'll end up being bigger by square footage than the Mall of America. So do you see that as a potential future for malls? People are trying to make them lifestyle hubs with more gyms and microbreweries and type of that. Like, do you think that is a future for these malls, or do you think the big cookie cutter malls that we've had they're kind of by the wayside?
Kevin will get a kick out of this. I think that sounds like a good place for venture capital to go and die. But no, in all seriousness, it's not that bad of an idea. But I don't see that becoming anything revolutionary. I know they have that hotel in the Middle East that you can ski in. I mean, just the amount of capex you have to put in with an uncertain return there, and people may get tired of it. I mean, I don't know. It's not where I would put my money personally.
I agree with you on that, Seth. I think it's a good place to put your money to die. I think someone's going to go and find a very low budget way to make malls important again.
I think the distribution center probably makes the most sense, like some sort of curbside pickup spaces for big box retailers.
Well, I think there'll be more community. I think there'll be more congregating at malls for some reason. That reason is unknown right now, but someone's going to figure that out. Curbside. I want to talk about curbside because why haven't we been talking about curbside for years? We kind of have, and I guess this COVID-19 response kind of drove that, just like working from home and other trends that we're going through right now. But I think, what do you think on curbside and the growth of curbside for the big box retailers and really the retailers that have a good brick and mortar presence? Maybe not the big box. Maybe it's those
Right.
smaller stores.
No, I mean, I think as long as you have, the parking, there's a parking situation where you can accommodate that. I mean, I think it makes a lot of common sense, right? Especially if people continue to be worried about their health and, the coronavirus and other viruses, and they don't want to be touching things or other people or getting into close contact. It's basically, for those retailers that can't get you something inside of a day, like Amazon, curbside pickup makes a lot of sense, and it's very convenient. You just go and you don't even have to. I did it at Ace Hardware the other day here in town, and I placed my order in the app and I paid for it inside of the app, and they just brought it right out to my car. So I think that's definitely here to stay. It'll be a major trend for years to come. Would be my answer
I
on
guess
that.
one of the reasons too, because of that, is the Amazon effect. It was 1 day, it was 2 day delivery, and then the big charge over the last 12 months or so for 1 day delivery, and because of COVID-19, that 1 day delivery didn't go to 2 day delivery. It went to like a 1 week delivery. So if it's 1 week delivery versus ordering online to Ace Hardware and going and picking it up that afternoon, that is where curbside really becomes, an attractive alternative.
Absolutely. I mean, I definitely agree with that. And I've seen in a couple of retailers, notable retailers that have reported this quarter, namely Best Buy and Bed Bath and Beyond. Best Buy said that their brick and mortar sales were running at 80% of their pre-COVID sales simply because of curbside pickup. So it has literally been that important for some retailers out there that it's kept them alive and kept their sales alive.
So Seth, you have written in the past about we've written on autonomous vehicles, how long it would take us to get there. You're now writing a little bit on last mile and that kind of delivery. So I wanted to ask you if you have an opinion on which do you think would come first? Which do you think we're going to see first? This move towards autonomous last mile delivery or sort of micro fulfillment centers, things built near neighborhoods, built close to populous areas to be kind of little tiny fulfillment centers, tiny distribution centers. Which do you think we'll see first?
Yeah, I'd go with the latter, the micro fulfillment centers. I think increasingly, if everybody wants to compete, Amazon will probably be at a few hours within a year or two, and in major population centers. Although there's one other thing that I was thinking about as a result of COVID, I think that the population is going to get more suburban, so people are going to leave city centers, so that could play into this a little bit, but. Everyone that I talk to on the autonomous stuff, I know Tesla says they can get there, by the end of this year or whatever. But, that is really, there's just so much to get to level 5 autonomy. And then there's so many regulatory hoops to jump through. There's been some retailers in China. I know JD.com has been successful with automating their delivery through drones and other things like that. But they have less regulations to deal with there. So definitely, I think that the distribution will continually move closer. That would be the trend.
I think it will too. I mean, I think it comes back to that curbside type of philosophy on the brick and mortar. Is micro, and I agree with you on autonomous. We're so far away from level 5 that, especially through this recession that we're having right now, because a lot of those companies that are working on autonomous vehicles are basically seeing their runways pulled or running out of runway altogether.
Yeah, I mean, we've seen some notable. It's on the trucking side. We've seen a couple of them close down. I mean, so it's tough when you're basically funding R&D spending with no revenue.
Right.
Into a massive recession, that's not a good formula.
And no immediate revenue, no intermediate revenue. It's a long-term vision. So whenever you hit a crisis, those are the first things that kind of get the plug pulled on. Those big bets like that.
Yeah, and I think that's true of This is an unusual recession, though. One thing I don't know how much time we have, but we talked about this pre-show. I can't think of many other recessions with you're approaching 30% unemployment, and things like RV sales and boat sales are absolutely booming. So those industries got absolutely destroyed in 2009, and I think that's a function of both the stimulus and the unemployment benefits this time around, basically being able to bridge that gap. But yeah, one thing that happens in recessions is innovation gets temporarily stifled generally because all the riskier projects don't get funded. But this time around, it might be a minor step back, but I do think autonomy is a very promising long-term trend. It'll just take a while.
Seth, I'm glad you mentioned that about innovation, because that's something I wanted to mention to you as well. Because yeah, as you said, innovation does usually get stifled in a recession. People have to cut back on R&D and cut back on capex. But it seems like because of the coronavirus, because of the need for lockdown and the need that people feel to feel safe, it feels like this might actually spur some innovation. Well, you see right now that Walmart and Target and places, they're keeping people safe with hand sanitizer and with masks. But it seems like technology will likely take over that for the long term. What do you think?
Yes, especially the more the businesses that are in dire straits will really have to innovate. Yeah, I was reading articles this morning about how movie theaters are going to reopen, and so they're going to open at like 25% capacity at first. They're going to cut down on the menu. They're going to put in, they're going to clean the theaters every time. They're going to move to only contactless payments. So there's going to be no more paper tickets and cash. And you're going to have to wear a mask, obviously. But so movie theaters, that's a real big effective one. That's just a good example. But you've seen a lot of this in the restaurant industry too. Now they're putting up these plexiglass stuff everywhere. Obviously, I think it's a huge accelerator for digital payments. If Mastercard and Visa weren't already in a good spot, and PayPal and Square, et cetera, those trends will. I think cash is was already dying. But what's crazy is cash is still like 85% of spending. I think that will be one permanent trend to benefit. But yeah, I mean, you're going to have to figure out one thing that I've also noticed, just a bifurcation in retail. The big guys that have a lot of square footage, those guys are more conducive to a reopening than the little guys are. Because in the little guys, you can only, if you have a limited amount of square footage, you can only have, because of social distancing and making sure to maintain, space and cleanliness, you can't have a lot of people in there. So it's hard to get your sales back up to where they were at a little retailer with limited square footage, just simply because you can't put as much throughput through the store.
Yeah, I actually ran by the mall just this weekend to go to Chick-fil-A. We were happened to be out in Hickson, so I went to the mall for Chick-fil-A, and there was only like 3 stores in the whole mall open, but one of them was Foot Locker, and they were only allowing 5 people in the entire store at one time. So I can definitely see how that's playing out already.
Yeah, I think there's a lot
Right.
of.
So imagine trying to get back to your old sales per square foot in that sort of scenario.
I think you're going to see a lot of technological innovation, but also business process innovation. I think that's where you're going to see the most value generating innovation is in business models, trying to figure out how to go forward. Like you're talking about movie theaters. If you talk about movie companies, distribution companies, I mean, do you cut out theaters? I mean, where does that mix go into direct to Amazon or Apple TV, rather than running it through a theater? And then, finish line only offering 5 people in. Restaurants realizing that they can do a whole new revenue stream, or the bulk of the revenue stream coming from takeout instead of dine-in, and trying to figure out how to do alcohol sales with that, because that's the highest margin type of items in restaurants. So the people who can innovate and figure those questions out, whether you're using technology or not, it's going to be a combination, are going to be the real winners. And we're seeing a lot of innovation right now.
Yeah, so Seth, we're running short on time. We only got a few minutes, but I did want to hear your take on restaurants, because you and I were discussing it the other day, and we kind of made the argument that even when capacity is reopened, even when the demand is back for restaurants, you can make an argument there that it's likely going to be structurally at a lower profit margin moving forward. Do you agree?
Yeah, no, I definitely agree. I think the only way forward for restaurants is to raise prices and then exhibit good transparency to their customers and say, we are raising prices because we have all these additional cleaning costs. We can only have, certain amount of seats in our restaurants. But if you think about it, the days, especially like I used to go to New York all the time. If you think about just sitting in one of those New York restaurants, you're sitting on top of each other. And so, I do think until we get a vaccine, that is, profit margins in the restaurant business are going to be hurt because of you're not going to be able to do the same traffic that you used to be able to do. You may not have the alcohol sales that you used to if there's a mix shift to takeout. And then also the online delivery guys, the Grubhubs and the Uber Eats of the world, they charge a big fee. And so they eat into what already is a low margin business. And then on top of that, we talked about, I saw somewhere that the average, take a $1 million restaurant. If you think about business economics for restaurants, the way there's something called a four-wall profit margin, which is basically the operating margin of the brick and mortar restaurant. And a really, really good margin is about 30%, and that's Chipotle. And then on the lower end, a 10% would be a really bad margin. I think you will, and the average is kind of 20%. I think that will move lower as you have to, you're going to have more people in there, cooking, cleaning, and then you're going to have less people you're going to have bigger overhead with less revenue. So that, in short, will mean lower profit margins.
Well, very good, Seth. You want to hang on with us to do our quick long shorts?
Yeah, sure.
Perfect. Okay, so our first one, this is a continuing talk from the coronavirus freight market update this morning, and Greg Miller has covered this just absolutely to the nail for the last few weeks, but that's about ocean carriers blanking sailings. We've now seen that, about 20% of the capacity was taken offline for May and June, but it now seems like the ocean carriers are not going to be extending blank sailings through July. They usually do it about 4 to 6 weeks out, so they would have already done it if they were to do it, but it's still up in the air. My question to you, Seth, is are you long or short that the ocean carriers will extend blank sailings into July and August and thereafter?
That's a good question. That's my weakest area. Let me see. So repeat that one more time on the blank sailings.
Yeah. Do you think they're gonna continue blanking sailings, or do you think that they're pretty much done with all the blank sailings into July?
I think there's going to be a demand recovery in the U.S., so I'm going to go short on the blank sailings. I would think those are going to slow down and/or stop, right?
Yep. How about you?
I'm short. We have limited time. Let's do I like the next long short.
Okay,
better.
yeah, I'm short as well. I think the demand will pop up pretty quickly. I think ocean carriers will be in a better spot July and August. Okay, Seth, my next one to you is, we saw the celebrity golf match this weekend, raising money for charity. There's rumblings that there could be an even bigger celebrity match coming up for charity, and it's not going to be golf, that it will be boxing. We've all seen the videos of Mike Tyson the last couple weeks looking like an absolute beast at 50 years old. Do you think we see a charity fight from Mike Tyson in 2020? And more specifically, I'm hoping for that Holyfield Tyson 3. Do you think we see some sort of charity match between the two in 2020, Seth?
This is the first I've ever heard of it. But what I'll say is I'm amazed. I think Brady's a 12 handicap, but he looked like a 30 out there. I would love to see it, but I don't have any. I don't have any knowledge on that. I think it'd be a good thing, though.
Okay. How about you?
I'm long. I'd love to see it. I'd love to see it. I'm long. How about you?
Yeah, I would too. You could take $100 out of my pocket to see that. I would love to see Mike Tyson fight again, especially against Holyfield or somebody at least his age. I don't think I'd want to see him fight against a 25-year-old professional fighter. I don't think that'd be too fair, even though Tyson might knock him out. But hey, Seth, thank you so much for joining us, man. We'll talk to you soon. Have a good weekend. Have a good day, I guess. Middle of the week.
All right. Thanks, guys.
All right.
See you later.
Thanks.
All right, so what else we got going on this week? I think you're talking, put that coffee down, you're talking a little bit about happiness.
Yeah,
and
happiness
sales.
and sales and how to balance that wire act.
Yeah, that is a difficult one to balance.
Wire. Yeah.
And then, we want to thank Carrier Direct
Yes.
for their contributions this week. Diane CO, you are the best. You're always giving us great stuff to talk about. And thanks to Ryan and Peter over there at Carrier Direct as well. I'm sure we'll have one of them on again next week. We have had a lovely show here today. And I hope you guys have a great rest of your week. We are on a 6-day, 23.5-hour break. We will see you guys next time. Thank you.